Hi everyone, we are Group 36 and we're excited to share with you our final report for the Critical Thinking course at National Economics University. Our group, Group 36, spent the past several weeks conducting a full due diligence project on a real Vietnamese business, Dong Paper Company Limited, the company behind the Shelton Tissue brand. Through this process, we applied the principles of logic, skepticism, structured analysis, and practical questioning to evaluate the strengths, weaknesses, and investment potential of this company. Dong Paper was established in 2005 and started out doing OEM manufacturing. But in 2014, they launched their own premium tissue brand, Shelton, which is now well known across northern Vietnam. The factory is based in Hung Yen, around 25 minutes from Hanoi. The company has 60 employees and a semi-automated production line. Their main products include facial tissues, napkins, industrial rolls, and hygiene paper, all made from virgin imported pulp. What impressed us is that Dong supplies major clients like AEON Mall, Vinmart, and even Sheraton Hotel. That tells us something about their product quality and trust in their brand. We started our due diligence with the commercial side. Vietnam's tissue paper market is valued at roughly $250 to $300 million United States dollars, and it's growing steadily. Dong positions itself in the mid to premium segment, competing with brands like Saigon Paper and imported products from China. Roughly 70% of their sales go through B2B channels, like hotels, restaurants, and distributors. The rest comes from retail and online platforms like Shopee and Lazada. Their brand recognition is strong in the north and their clients remain loyal. But they face risks from cheaper competitors and rising brand power in the south. Their pricing power is moderate. They can't raise prices too aggressively without risking customer loss. In 2024, Dong Paper generated around 44 billion VND in revenue, and their normalized EBITDA was 7.5 billion VND, resulting in a margin of roughly 17%. We reviewed their financials and found them stable, clean, and conservative with no red flags. Their gross margins are around 35%, and the company carries very little debt. Liquidity is healthy. DSCR is 2.4x, and return on capital employed is about 15%. Good for a manufacturer. One area to watch is their input cost risk. 80% of their raw material cost is pulp, imported from Indonesia. That exposes them to price shocks and FX fluctuations. But otherwise, their cost structure is fairly lean. We also created a 3-year financial model and ran a break-even analysis, and the company has strong buffer margins even if input costs rise moderately. From an operational perspective, Dong has strengths and gaps. Their factory produces about 20 tons per day, but they're only running at 60 to 65% capacity. This means there's room to grow without major capex. They recently invested 25 billion Vietnamese dongs into new converting and packaging machines. That improved efficiency and reduced product defects. However, some parts of the production, like labeling and wrapping, are still manual. They don't use an ERP system. There's also no power backup, so any grid outage means downtime. These issues don't pose a huge risk today, but they could become obstacles if the company wants to scale nationally or go into exports. Legally, the company is clean. They have full licensing, are tax compliant, and even hold ISO 14001 certification for environmental management. But there are a few areas to improve. The Shelton brand is only registered in Vietnam, which could block future expansion into ASEAN. Also, there's no formal legal handbook, internal dispute process, or standardized contracts. On the HR side, morale is good and turnover is low, employees feel loyal and well treated. But again, everything is managed manually. No HR software, no formal performance review, and no clear promotion pathways. For a small company, that's fine, but for any investor or acquirer, those gaps should be addressed early. Based on our financial analysis, we estimated the company's value using 3 methods. EBITDA multiple, applying a 6.5x multiple to 7.5 BVND EBITDA gives a base valuation of 48.75 billion VND. Revenue multiple, applying a 1.1x multiple suggests a valuation of around 48 to 50 billion VND. DCF model. Our DCF resulted in a valuation range of 42 to 56 billion, depending on sensitivity to pulp prices and operational efficiency. Our model includes working capital projections, capex assumptions, and cost scaling. The business isn't high growth, but it's solid and profitable. What are the main risks? Pulp price volatility, informal sales contracts, limited digital infrastructure, no international brand protection. And what are the synergies? A beer could provide ERP systems, marketing, and e-commerce support. Partnering with a logistics network could reduce delivery costs. A branding revamp could help Shelton go national or regional. These aren't minor, but they're all solvable with a modest investment and operational support. So, after reviewing everything, what's our recommendation? We say, conditional buy. The company is financially healthy, has a strong product, loyal customers, and space to grow. But an investor should only proceed if they're willing to invest in ERP, HR, legal structure, and brand expansion. With those changes, we believe Dong Paper could double in size in 3 to 5 years and even move into export markets under the Shelton brand. More than just an analysis, this project taught us how to think critically, to question assumptions, dig deeper, and combine data with observation. From reading balance sheets to interviewing the company leader, we learned how to connect theory with reality. We also practiced separating opinion from fact, especially when estimating value and risk. That's what critical thinking is really about, challenging what looks obvious and seeing what others miss. Thank you for watching our due diligence presentation on Dong Paper Company. We hope you found it insightful, and we're happy to answer any questions. This was Group 36, and we appreciate your time and attention.
What's poppin'? Gồm mấy con rắn toàn toxin. Quá nhiều drama để dắt mũi. Chúng một tin sái cổ như là Hawking. Làm gì mà chả căng, đừng hỏi là tại sao, vì đấy là khả năng. Trình độ ngày càng tăng, bây giờ phải lên sàn trên cổ phiếu để làm ăn. Chúng mày quá là non, nếu như ta là tre thì chúng mày chỉ toàn măng. Nhiệt độ ngày càng tăng, ok để giải nhiệt tao định đá cả hàm răng.